Welcome to the Deep Dive. We're here to really unpack some powerful ideas for you. Today, it's all about smart choices for investment success. We're drawing from some really interesting source material. Think of it as, well, a kind of blueprint for building real financial strength. We want to cut through the noise, our mission, to distill the core ideas into something you can actually use. We'll be looking at four key pillars today, a shortcut maybe, to building that solid financial base. So let's jump right in. The first choice the material highlights is confront reality. Now, when we talk about that for investing, is it just looking at your bank balance, or is it something deeper?
That's a great question. Yeah, it's definitely deeper. Confront reality isn't just, adding up assets and debts. That's part of it, sure. But it's really about an honest, multi-layered look at yourself. Understanding your actual tolerance for risk, for instance, not what you think it should be. And facing your own biases around money, like fear of missing out or sticking with losses too long. It also means thinking realistically about your future cash flow, maybe even under different economic conditions. A lot of people kind of skim past this part, and then their strategy doesn't really fit who they are or their real situation. That's often where things go wrong.
Okay, so it's really understanding your own psychology, your own financial DNA, almost, as much as the spreadsheet. Got it. So once you've done that hard work, that grounding, the second choice is grow capacity.
Yeah.
How do you actually do that? In investing terms specifically, it's more than just like reading finance blogs, isn't it?
Oh, absolutely. Much more. Grow capacity is less about just collecting facts and more about actively honing your decision making skills. For finance, that means building what you might call a robust mental model. So, understanding things like valuation PE ratios, discounted cash flow, that kind of thing, and grasping how bigger economic trends might affect different investments. Crucially, it's also applying ideas from behavioral finance, understanding why you make certain choices and why the market sometimes acts, well, irrationally. It's this ongoing process, becoming a sharper, more strategic investor, understanding the why, not just the what.
That makes sense. Getting that deeper why. So you're grounded in reality. You're actively growing your skills. What stops you from just getting comfortable or stuck? The source calls the next step fuel curiosity. That sounds a bit abstract, maybe. How does curiosity actually help in a field that seems so driven by numbers and data?
Right, it might seem abstract, but the source really stresses this isn't passive daydreaming. Fueled curiosity is about actively exploring, looking into new markets, maybe emerging technologies that are creating whole new sectors, or even just different investment strategies you haven't considered. Curiosity is like your radar. It helps you spot potential opportunities maybe before everyone else does. Think about early investors in, say, renewable energy or certain tech niches. It's about staying dynamic, questioning your assumptions, always trying to figure out what might be next. That's vital when things are always changing.
Yeah, staying ahead of the curve, or at least not falling behind it. Okay, and that brings us to the fourth and final choice create change.
Hmm.
It sounds like where the rubber meets the road, right? Taking action.
Precisely. Create change is where it all comes together, and it's continuous. It's applying what you've learned from confronting reality, from growing your capacity, from fueling that curiosity. It's having the wisdom to adjust your strategy when things change, new information, different goals, market shifts, and importantly, having the courage to actually make those changes, to execute your decisions. It's not just one big decision, it's about consistently applying your insights and refining things along the way. Without that consistent action and smart adjustment, all the learning and self-assessment, well, it doesn't actually build wealth.
Right. So just to quickly recap those four pillars for building that strong foundation confront reality, grow capacity, fuel curiosity, and finally, create change.
And if you put those four together, really integrate them into how you approach investing. That's how you build that solid base for consistent long-term growth the source talks about. They really empower you, the listener, to be more proactive, more adaptable, and frankly, wiser on your financial path. So maybe final thought to leave you with. Which of these four smart choices confront reality, grow capacity, fuel curiosity, create change? Which one feels like the biggest challenge for you right now? Or maybe, which one feels the most exciting to lean into?